Hello everyone, I hope you had a great week as I did. We were swamped with a lot of data and information that was published this week, particularly from the mining sector. So I'll try not to bore you with too many dry numbers and details, but the info did give us some insight into how the market played out in 2022. But let's focus on De Beers for a bit, as the company held its February site and published its 2022 earnings report this week. And we had expected the earnings to show a strong year for De Beers, and indeed it lived up to those expectations. It was a great year for the company. Revenue was up 18% to $6.6 billion. Earnings jumped 60% to $552 million. And all that was driven by a 35% rise in the average sales price to $197 per carat. Now, there are two things that affect the average price. There's the overall price movement of like-for-like goods, as reflected in the 23% rise in De Beers price index, and then there's a change in the mix of goods that were sold. So if a company sells a higher proportion of high quality, more expensive goods than before, it'll affect the average price to be higher, and vice versa on the downside. And both of those things happened last year. There was a shift to better quality and larger diamonds, at least in the first half of the year, and we saw that increase in the price index, and those two combined affected a higher average price. Remember, De Beers aggressively raised prices at the beginning of last year, riding the momentum of a strong 2021, and then it kept its valuations relatively steady for the rest of the year, even when the market turned in the second half. Now, the company has reportedly raised prices on smaller size rough at its February site by an estimated average of 10%, and that follows similar increases last month. We've been saying for some time that there's been stability and relative strength in the small polished market, but those increases in polished have not matched the extent to which rough prices have been hiked in the last 2 months, and that has some manufacturers worried about their profit margins on those goods. So De Beers continues to influence the market as the major diamond producer, and it has clearly gained from the restrictions on Alrosa. Remember, this week marks the 1-year anniversary since Russia's invasion of Ukraine, which led to sanctions on Alrosa and effectively bringing fewer clients that were buying Russian rough. Back to De Beers though, it has a big few months ahead for the company. It is integrating new leadership, as Al Cook began this week as De Beers CEO, and the noise around its negotiations for a new deal with Botswana is only going to get louder as the June deadline for that deal approaches. Botswana clearly wants more of the De Beers production pie, and one gets the feeling that there are still many sticking points to unstick, so to speak, in those talks. So we'll watch this space. It's a big story for this year. Elsewhere, the trade is very much looking ahead to the Hong Kong show running from March 1st to the 5th to gauge Chinese demand, and if that expected pent-up demand from mainland China is ready to be released after all the lockdowns of the end of last year. As for me, I'll be in Munich this week and speaking at the Inhorgenta show about trends in the diamond industry, what our present and what our future might look like. So if you're around, look out for me and say hi. Come to the talk. It should be fun, and have a successful show. I'm really looking forward to being there. So till next time, thank you for watching this Diamond Market Roundup for the week ending February 24th. Like and subscribe to get more videos like this one. And don't forget to go and check out our sponsors on RapaportAuctions.com. Sell your single stone and melee diamonds for the best cash prices through Rapaport Auctions. Thank you for watching. Have a great week ahead, everyone, and we'll see you soon.